Oliver, can you lay out the features of an ideal trading plan? Yes, very quickly. Ideal trading plan. You have to be aware of all the parts of a trade to build a proper trading plan. And so, for instance, there are 7 components of a trade. I'm not going to explain them here, but there are 7 components. I'll give you a few. Like one component is your entry method. Like how do you enter the stock? Let's say a stock that you want to buy. You can't just have one entry method. So you might have 2 or 3 entry methods. And then you have an initial protective stop component. Like where do you draw the line? Where is this trade wrong? At what price is that? Where is that? Where is your uncle line? Where is the line in the sand? And what's the method by which you come up with that line in the sand? Do you have a name for it? So when you grab all the components of a trade, identifying the trade, the entry, the initial stop, when and where do you add? What's your add technique? What's your add strategy? These things should not be done from the hip. They shouldn't be done based on feeling or a thought. They should be mapped out on a piece of paper. And so when your trade should already be mapped out before you take the trade, which means that once you're in it, basically the piece of paper does the rest. The piece of paper determines, based on your plan, where the protective stop is. The piece of paper determines when and where you add and by how much. The piece of paper determines when and where and by what method do you take profits, and how much. Do you take half? Do you take a quarter? Do you take all of it? All of that has to be mapped out. All right. How do you adjust the initial stop? So as your trade starts working, you can't keep the initial stop in the same place. You've got to move that. By what method do you move that? Where do you move it? When do you have the right to move it? Is it possible to move that too quickly or to move it too slowly? And so all of this has to be mapped out in a trading plan so that it's almost like following a script. Okay, I enter based on this here. I place my protective stop here based on this. I add one additional lot to my position based on this. I take half of my profits based on this profit rule, and I adjust my stop based on this metric. And when you start trading specifically like that, where all of your trades start to be mapped out the same, meaning the same formula is applied to every trade. And that's where your consistency starts to come in. You can't be consistent doing your trades inconsistently. Like you trade this way, another trade another way, and another trade even another way. Like how can you gain consistency playing your plays in an inconsistent manner? No, every trade should be forced through the same formula. Every trade should be forced through the same template. Every trade should be squeezed through the same trading plan so that on the other side of the plan, out pops the trade that's the same as the prior trade, as this trade was the same as the prior trade, and this trade was the same as the prior trade. And that's where your consistency comes from. Whitewashing every trade to look the same at the end of the trade. And so you need a plan to run your trades through. And your plan becomes the replacement for your thoughts, your feelings, and your beliefs. You see, your thoughts, your feelings, and beliefs, they are your enemies. They fail you. You think this way one time, you think another way another time. You feel this way now, but you feel a different way 2 seconds later, right? They're wishy-washy. They're flip-floppers. Thoughts and feelings flip-flop. You can't ever gain consistency trading based on what you think and trading based on what you feel. You've got to give the control of the trade away to your plan. And so you become the monitor of the plan. The plan becomes the trader. You have to disappear or go away in a way. And those are the traders that make the best progress. The traders that have a solid trading plan, and the plan becomes the replacement for their thoughts. Now, you can let your thoughts run wild. Let them run wild. Just don't act on them. They're your enemy. If your thoughts were so great, you wouldn't be here. You wouldn't need help or guidance. But your thoughts are your worst enemy. If trading based on your thoughts worked, we wouldn't need guidance or training or anything like that. We would just think and make money. But it's the thoughts that actually get in our way. And so I want your trades to be mapped out before you take a trade, so that you're just following the same script as the last trade. So you know exactly when you're going to add. You know exactly when you're going to raise the stop. You know exactly when you're going to take half of the profits off. You know exactly where you're going to stop out. You understand? You know this is mapped out ahead of time.